And we are officially back to our broadcasts, broadcast live, so you can post comments and questions on the chat live right here, right now. So after this longer pause, I want to just go through the topics we have scared during our absence, but I hope you will get right here the longer and wider spectre of what's going on and what may come up next. So I hope that won't be boring. I will do my best to get you through and get you the biggest and the strongest knowledge bomb that will get you closer to of what to invest in the coming future, and also will get you an insight on what's going on in an stock market and crypto and commodities as well. So without any further ado, let's get to an intro. Alright, so we are right at the economy view block, and I want to go through strictly to the most important element that is today's Fed meeting. So today at, what was it, 2 p.m. or 4 p.m. Time. We'll check it out. What was the time? So at 2 p.m. we'll have a Fed's meeting. So Fed's meeting will be right in 45. Sorry, I have the call. So we have in 45 minutes this meeting that I will go through with. I will discuss it with you right now. So the one thing that I wanted to point out when discussing that issue is that a policy rate may eventually get paused with its decision of Fed after the CPI rate that came up, and as well after Huck and Jefferson spoke up, strongly suggesting a pause and hitting the dollar. So right now, after even those data from JOLTS and NFP that have suggested a potential rise, there are much bigger probability we'll have the pulse right here. Also, the Fed meeting probability rate is right now assessing with a certainty of 94.2% that we'll have this pause on this meeting. That's why we had the market rallying due to an occasion. Right back, we can find that the Fed might have a problem when it will allow the market to pause. It will be very difficult to backtrack and eventually turn into a more hawkish narrative after such a step. So I guess the Fed, if it pause for now, it will take at least few months for the situation to really spread with this pause and with this normalization of this hike policy. So I do expect that it will be very right now improbable to having the next hikes after this pause will come over. That's why the Fed needs to think twice before making a decision. So I do bet that the Fed will anyway pause, but we'll find out right today in an hour. So United States core inflation rate that was recently been delivered has found that we have just slumped, and it's positive for Fed to pause and for the economy by large. So right here we can find that in May of 2023 this gauge has dropped to 5.3%. And it means that right now this policy rate is achieving the level that is almost equal to the inflation. That's why this peak might have been reached. What with bonds right now? So more than 3 trillion worth of bonds mature in the next 3 months. This means that a similar amount will disappear from the market, and that's also bringing us to another thing, that how would it get been replenished? The Treasury Department's main account has been drained, and it's around $60 billion left right there that need to be that's an amount that need to get been replenished, and that's why we may have another liquidity issue until the things will eventually heat up. But this event of replenishment is rescheduled, and we may have a longer pause until it eventually happens. That's why this liquidity problem may extend for the longer period, but may not be as shocky as it previously been thought to become. So also, when talking about the liquidity issue, excess liquidity is crucial for the US stock market, and after this quantitative tightening period, and also what we're talking about moment about reverse repo, we still have some issues to handle. So this American debt and standard operations of reducing the balance sheet by the Fed are the things that yet get to be sorted. So after reaching an agreement to raise the debt limit, excess liquidity may head towards pre-pandemic levels. The Fed speculated it could be in the range of 2 to 2.5 trillion. But how many most of the liquidity will get eventually drawn? The question reappears. Reverse repo to blame. So if the Fed reduced the value of these operations, it may turn out that the negative impact on the stock market, on the commodity market, will not be so great, and it will be more important for the market that these risks will disappear from the market. Right now, however, we still have the things that bring in some buffer in for analysis, and yet need to be also tackled. Right now, DNX are rising, and alongside the copper to XAU to gold is lagging. So it means that right now the DNX is in a divergence. The bonds are in divergence to what's going on with copper, and it may eventually get aligned. Right now, the one of the two composers are appointing that kind of a turbulent time might be ahead, and that's why the cautious is yet to be really appointed and recommended. What about bonds as a whole? So positioning on bond futures is extremely low, and it means that right now the squeeze to the upside is the most likely scenario. There is very there's low possibility of having this pivot been intact this year. That's why we still have a TNX get thrive, and this interest rate cuts this year as unlikely. We may have the 10-year yields have a chance to get down to around even 3% in the nearest future. What about the global sentiment? Then we have a global PMI right here that moves back slightly among others due to China. The index is at a rather weak, but certainly not catastrophic level, as we can find. There is nothing to be told about the real recession. So poor industry, stronger services with considerable geographic variation. The industry is facing extremely high inventories, and demand is still quite strong. That's why even though there is a relatively low activity, we're still trying to defend those 50-ish levels that are intersecting us from this recessive territory. China reopening composite, when we are just studying the economy, we need to look at China as a factor of a word, and the indicator has been constructed with exclusion of flights index, but we can find that after this very rapid rebound, right now we are just suffering from a downward movement. So this second quarter is not as strong as been expected. So also about mortgage slide is a hallmark of a weak buyer sentiment, and also this announcement of further support measures for the real estate sector has been criticized, as there are lots of zombie buildings already standing out there, and this artificial trial of stimulating an economy may not succeed this time. So the brokers, home brokers, have problems. The market, also this leading indicator of economy, that is housing, right now having an issue in China. So that's why that will be more difficult for the global gauges to recover. But Nikkei was the one of the strongest index lately. That's the economy that right now is not concerned about inflation at all. It's been waiting for the type of inflationary to come up, and eventually this inflation is boosting the interest in many of companies, among them Uniqlo and Toyota, that has gained astoundingly lately. So since the beginning of April, investors have snapped up a whopping 45 billion worth of Japanese stocks, and that's why that Nikkei 225 stock average has reached at its highest level since 1990. People are right now wondering if they can break through the elusive peak that had been reached final trading day of 1989, but right now factors such as low GDP growth, high levels of debt, and weak consumer spending may contribute to eventual underperformance, even though lately it has recovered a bit. And who was outperforming in the post-pandemic labor productivity race? That was Japan, as we can find right here. That's the time for Japan to thrive. So many of the bulls that were waiting a lot of time may eventually give themselves a 5 for the patience. What about the market outlook? Right here you can find the profits revival, and year-to-date gains in the equity markets have been driven by multiple growth due to the market's expectations for rate cuts by the end of the year. And in the EI sphere, Nvidia's results from the May were the key turned out to be not the results themselves. The announcements of a huge increase in revenues has pushed the market upside, and the mood of the broad market wasn't spoiled by a more modest report of C3 AI that also has published the earnings report. The results there were only slightly better than expected, but the revenue forecast turned out to be weaker. So right now, this AI optimism is spreading over the indexes, and we can observe it right on the Nasdaq and S&P 500. So what about rooted optimism? I wanted to point out a strong first 100 trading days bode well for US stocks, and that's what exactly we may assume that it will be very difficult for the markets to erase that first 2 quarters gains. We may have a correction, yes, indeed, but it will be very difficult to drop it by over 20% in the next few months. That's why those that are keeping the stocks from the beginning of the year may not get totally surprised, even though it may have a correction phase ahead. So that's why I wanted to talk about this type of statistics, pointing that it's not that concerning performance yet to come over. What about crypto outlook? Lately we had Binance asset freeze, some rumors about it. So the SEC is attacking crypto market without a sign of hesitance, and Binance has been accused of trading of non-registered security tokens, and right now there are some threats of even having its all accounts frozen. The Champing Zhao, the CEO of an exchange, is claiming that operations like this would quickly grind to a halt without the ability to pay employees, vendors, suppliers, and professionals, or to maintain the trading platform. So it will mean the real carnage for the crypto industry, and BTC USDT will be the main victim of it. So at least in a short term, because in a longer term, I guess. Sorry, I need to take a sip. Because in a longer term, it wouldn't bother the crypto industry, as it's decentralized, even though some of the regulation may stave off the innovation, it may eventually move out somewhere else to Europe or Singapore or other Asian regions. That's why US right now is trying to scare some type of investors, but I guess in a shorter or medium term time horizon, it won't be as dreadful as it seems right now. So since the lawsuit has come over, Binance US is at threat of being no longer holding its assets, but I guess it will eventually get rebuffed. When it come eventually, it's yet to get find it out. So it was about crypto. Right now, let's get to market movers, and let's talk a bit about what's going on with our data of this and previous week, and this. So we have for this week with an impact of 3 stars. So I will just get through the most important data. So we had since, or maybe I'll just get it through 05 and 23. All right. So we had on 24th of May, IFO business climate that has surprised the downside from Germany. On Friday of 26th of May, we had personal spending that has been a bit better than the forecasts. And on Wednesday of 31st of May, we had inflation rate from France and Germany that both together has slumped. In terms of Thursday, we had inflation rate year-over-year from Euro area with a forecast of 6.5, but it turned out to get us to 6.1%. On Friday, 2nd of June, we had unemployment rate from US that was at 3.7 instead of 3.5 expected, and the most important event of 5th of June was a ISM services PMI. So that was from US, and it turned out at 50.3. So we're still revolving around this neutral area. On 6th of June, we had GDP growth rate of Australia at 0.2%. So it's still avoiding recession. And on 7th of June, we had balance of trade of both US and Australia. You may just find it out on your behalf at tradingeconomics.com. On Thursday, inflation rate from China still at the similar level at above the surface, and an employment rate from Canada at 5.2% on Friday. On 12th of June, this Monday, we had NAB business confidence that has surprised to the downside, and inflation rate from US turned out at 5.3 with a beating of forecast with previous one at 5.5. This week we have also obviously Fed press conference at half past 2, and on Thursday we have a retail sales from US and ECB interest rate decision that's obviously very important indeed for the Euro USD pair especially, and Bank of Japan interest rate decision. So we have a turbo important week to watch. In terms of other data, I wanted to just point out into earnings reports just quickly what we have right. At earnings reports. So earnings calendar from investing.com. Let's find it out. So we don't have many noisy brands yet, as many of them has already published. We had on Monday Oracle that surprised to the upside, and sorry, not that. It's loading. So once again for this week, Oracle that was better than expected. HT and Barford, those are not maybe very large companies, but HT is over 30 billion. So it was not of no, that hasn't had any neutral impact on the market. That's why this positive outlook for the for the EPS is right now boosting the valuation of the company, but if we find the revenue, it's slight better. So it looks like the company may not really tackle with this higher inflation period for the economy. On other side of companies, we have tomorrow Adobe and Tesco on Friday. So those are the most important data. Let's find out quickly what happened since 23rd, 24th. So we had Nvidia. Obviously, it was a bidding. What I have also approached. Costco has surprised. Also, we had what were the most important HP, that revenue has slided, but income has risen. So those are the problems of many of companies, right? In the current environment. Salesforce has beaten, and so it was positive for the Nasdaq. So it was the Monday was it the Monday? So it was 31st of May, so it was Wednesday. Broadcom has beaten Lululemon Athletica also. As of next, we had Harco, GitLab, that also has beaten the expectations. Ferguson as well, Brown-Forman and Triplecam that also beaten. On Thursday of 8th of June, we had DocuSign that beaten, and Neo on Friday. So we can find that majority of stocks has beaten the expectations. That's why we had some free modes on the markets. So what about next elements is the trade idea. I wanted to jump over to the most important indexes as well of US. So let's jump to SPY and US 100 with the possible indication of opportunities on the market. So we had right here SPY, and SPY right now is in this freer mode. Is climbing up higher with a possible resistance at 441. So you can find right here that might be the stopping point. 441. That was the resistance back in the second half of April. So right now there's very difficult to stop SPY, but today's decision might be the one that may halt the acceleration and will possibly get the market to somewhere lower valuations. In terms of QQQ, so US 100, right now we are also thriving and awaiting the Fed's decision that is yet to be delivered in a moment. So US 100 right now is having a possible headwinds with resistance getting very, very, very close at 366, and I will wait for any type of reversal before hitting a sell side of a market. That's why I don't want to recommend any type of trades right now unless you are already in a long trade. So await for the Fed's decision, and afterwards we'll have a much more clear situation on what's going on. So that's it in today's episode. Thank you very much for popping in, and we'll be back tomorrow at 8:45 a.m. East time. I'm very glad you decided to stay with us, and since today the episodes will get been published regularly. So that's it, and have a nice evening.